Welcome to Technical Market Insights, ladies and gentlemen, where we're going to take a look at the stock charts and the overall market. And let's see what we believe will happen because we've been pretty accurate so far. We believe the stock charts tell you all you need to know in the market. You can follow all the news you want, but how many times have you seen the market rally on bad news, drop on good news, and the world keeps spinning? We love to make our money make money and just keep compounding profits. So we're going to take a look, and feel free, leave me some comments below. Let me know what you're trading, why you're trading it, what you're getting into. As you can see, we got Green Thumb Industries up on the screen. So we're also going to take a look at some things we're watching in the market. We're going to look at the bullish oversold stocks out there in the high cap 1000, the bullish sectors, and just some of our favorite things to keep an eye on. Make sure you subscribe. If you haven't yet, you probably want to turn on your notifications because pretty soon we're going to be trading an account in January, totally transparent, and I don't think you're going to want to miss out on that. But right now, this is something we're watching in the market, Green Thumb Industries. It is a cannabis company, and out of all the cannabis companies, I believe it's probably one of the best as far as making profit. A lot of these companies went out of business, ladies and gentlemen. People have been, I remember when the cannabis sector started, and I remember people up here yelling bye as I was just patiently waiting. When new industries, I don't want to say new industries, but when things come out like that and there's a ton of laws out against them, you should probably wait until legislation takes place. Otherwise, it's going to be choppy. As you can see, not only was it choppy, you had a ton of people come into the market, and which created a ton of competition, and a lot of companies went out of business. And if you look at some of the cannabis ETFs, which we can pull up here, there's a couple that come to mind. YOLO was one of them. But if you look at these, this thing was $31 and is now down to $2. I would much rather buy an ETF than a single stock. But a lot of these ETFs probably still holding. Now, I don't know if this is 100% accurate. It could have more, it could have less, could have different companies. SNDL. I thought that was actually an ETF that's coming up weird. Anyway, this is everything this company's this ETF's holding. And there may be a lot in here that, if you look at PE, may not really be making money. May be priced to, look at the PE on these. That's just, I don't think DTBIF's PE's coming up in here, which I don't think it does in my brokerage either, but I read their last earnings. I believe they got a positive cash flow and got some cash put up. The books are probably looking the best. Anyway, their chart definitely is by the ones I've looked at. I'm trying to think of some of the other companies. There's the other pot cannabis companies out there. This is another one that I hear a lot about. Now you do have this thing was $65. It's down to $1. So the possible uptrend is definitely a lot more than Green Thumbs, but what the chart's telling me, it's not close to what I like. Green Thumbs is actually broke over the 200-day. Unfortunately, I broke under it right there, couldn't hold it. But then again, I'm watching it. I'm hoping the next couple swings it stays above the 200-day. This may be one of the first long-term 10-year outlook plays we add to our educational brokerage account we're starting up in January. So we're keeping an eye on that. And that's about really it as far as that. We're always watching nuclear energy. It's the ETF. PWXT is one of our favorite plays out there as far as nuclear energy goes. Anyway, keep an eye on those. Let's take a look at the overall market real quick. Oil actually dropped under the 200-day moving average last week, popped back over it. Might be a good time to fill your car up. I think it's going to drop more. Honestly, I wasn't paying too much attention to it. I really don't trade commodities, and I've even said on previous videos, I just kind of watch oil, try to pick and choose when I put gas in my tank, which is kind of stupid, but hey, I'm cheap like that. Not that it really affects me too much, but right now it's oversold. Feel good about filling up. If I see it's overbought, I got half a tank. I may wait a few days. You get what I mean? Anyway, I don't trade commodities too much. I don't trade single biotechs. I don't short the market. I don't trade trash. We try to grind profits continually and swing trades, which could take anywhere from 2 weeks to a month in real quality companies. That's how we continually stack profit and manage our accounts very well. It and XOP is probably the only two sectors out there that's oversold right now. But regardless, I only trade or invest things I believe have a good 10-year outlook. And oil isn't one of them. I believe it'll be around in 10 years. But I believe with all the money and resources flowing into alternative energy, nuclear energy is really my favorite energy space. That's why this will probably be same with water, but there's a water ETF that just crossed over the 200. As far as water resources go, CWCO has been our play for quite some time now. I believe our long-term portfolio is up, probably about 200% on that. I think we locked in some gains here when it crossed under the 200, but then ended up getting back in here. So it didn't take too much off the table as far as, maybe 8%, but that's just one of our rules because we've seen what happens over and over and over in our videos of what happens. And there's plenty of examples in the book when something crosses under the 200-day. We stay away. Can't hold the 200-day moving average. We don't want it in our portfolio. Anyway, I'm not really trading any of these. If you are, keep your moving average. I'm so focused on moving averages in the market. Anyway, keep your cost average down on your position and lock in profits when it's overbought. You may have to be patient. The weekly charts on these have pulled back. Now, we did call a weekly overbought condition weeks ago, obviously, when we actually called a weekly bounce in the market, which we'll look at here in a minute. So the weekly charts on oil and oil exploration has been overbought. We expect them to pull back, which they did. And on the overall market, we expected them to rally, and they did. I could really stop the video there because that's what's happened. But now we're expecting maybe a little more run. There's a few we're going to look at with a little more room before they're overbought, just like that's a little more room before it's oversold. And that's really it. All right, the daily charts. It is oversold. Well, crossing out the oversold condition, it could bounce back in. We could see it fight this 200-day moving average for another week before it actually recovers and goes up. Same with oil. But the weekly charts, once again, oil's weekly charts definitely getting oversold. Monthly charts was another reason we were going over the resistance at this area, a month or two ago. So keep an eye on those things. And let's jump into another oddball, which is biotech. This is the monthly chart for biotech. We actually called a heck of a support line right here. And, I kind of regret not putting a big chunk of change in it because I did say, hey, got a heck of a support right here. It's probably about to bounce pretty hard. And as you can see, 10% in a month, which we would have traded LABU, which gave you 27% in a month. Once again, this is why I trade leveraged ETFs based on the ETFs chart, not the leveraged version, because they do look different. All right, which you'll see over and over again. So this was over the 200 bar moving average, just started. Oversold, would have been a heck of a monthly trade. And honestly, when I bought that, I would have put that money to rest for quite a while, meaning I would have just kept an eye on it. If I needed to average my position down, I would have averaged it down. I don't trade monthly trades a lot, mainly because it's a longer time frame of a trade, and usually the daily charts look like crap. As you can see, the daily chart broke a head and shoulders pattern up here under the 200-day and continued to drop, which we called up here all day long, and you could have made a ton of money in LABD, like 150% or so. We just don't short a market, even no matter what market it is. Made a ton of money shorting stocks. I just don't like the mind frame it puts you in. Anyway, it's starting to, once it caught that support, I think the daily chart's going to start shaping up and heading upwards. Regardless, we're out of that right now. If you're making money in it, that is great. The weekly chart, we even looked at the weekly chart and said it would bounce on the same support, and it has. And, either of those trades, well, I take that back because the weekly chart's under the 200-day, which, once again, it don't matter if I'm trading hourly, the daily, the weekly, the monthly. I stick to my rules for that chart. So, for instance, the monthly chart's over the 200. So if I got into this, it wouldn't have been on the daily chart or the weekly chart. It would have been on the monthly chart, being oversold over the 200-bar moving average. Now, even though I entered it on the monthly chart, my entry is going to be oversold on the daily chart. Hope all that's coming together for you. The more you watch, the more you pay attention, the more you're going to be able to look at a chart and say yay, nay, double down, triple down. Let's make some freaking money. All right. And then let's get into the overall market. We'll start off with semiconductors and then go to technology and then look at Dow Jones, SPY, and we'll even throw utilities in there. But anyway, semiconductor ETF has just really rallied way more than I expected. We actually called the weekly rally back here. All right, so we were saying if you want to do a weekly chart trade, enter here. And honestly, you could have took profit there, which is 6% here, but probably would have been about 18%, 20% in SOXL. I mean, just because that did hit the trend line. So the trend line we had up, but it broke through, so we removed it here. Would have been a good lock-in profit, and you could have really entered here again. So you would have had about 18 to 20% there. You would have played it again here, traded again here, 17%, which, let's look at SOXL. So that chart will never look the same, but let's say you entered here, your average was there. Could have locked in, like I said, about 20% on the trend line. And when it bounced back under, so you build an average here, meaning bought multiple times, scaled in about 54% in 21 days. Ladies and gentlemen, that's a heck of a profit. But some people hope they get over 5-year span, 10% a year. All right, so that is why we're on BWXT. Anyway, so the daily chart now is oversold. The weekly chart, which we called would bounce, is entered over bought territory. And I'm sorry, the daily chart is overbought, not oversold. And we're expecting a pullback, obviously, because of those conditions in the daily and weekly chart. We've seen all that coming. Monthly chart, I mean, look at this. Now, this is a strong month so far. And if this thing breaks out, I mean, we could see, I mean, that'd be bullish as heck if it broke out, really. I mean, that's one heck of a V-shaped recovery, pullback, breakout. I mean, wouldn't surprise me if that broke out. You'd see 180 to 200. Keep in mind, this is very, very heavy NVIDIA. All right. Now, the PE on this company is over 100 for sure. I'm not sure exactly what it is. So, as always, when we buy something, whether we're trading it or investing in it, once we find a bullish chart, we look at the fundamentals, PE, whether or not it pays a dividend, price to book. This channel, needless to say, we like to have a little Benjamin Graham little Warren Buffett, little Peter Lynch, along with that. Okay, how we conquer the freaking market and make our money print money, to say the least. All right, so that is SMH as a whole. I mean, nobody knows what's going to happen in the market. I mean, maybe some really, really high up elites, but not me, not you. If you listen to this channel, unless I got some big elites listening to it, which I doubt it. Anyway, but whatever happens, you got to have a strategic game plan for entries, exits, managing your positions. For instance, some people may be right now looking at that and their mind's thinking FOMO, fear of missing out. They don't want to miss out on that breakout. Okay, if it does break out. Well, you know what? I'm not worried about it at all because I know swings are going to swing. I mean, that swing to that oversold, the overbought right there, that's on the weekly. Let's back to the daily. I mean, right here, you would have held for 22 days, locked in profit, then waited 20 days, bought again, held for 20 days, locked in profit, waited for 20 days, 16 days, bought again. The swings happen, ladies and gentlemen, no matter what. Okay. So one thing to get rid of that FOMO is understand that swings are going to happen. They're going to always happen. You're going to have an opportunity, whether it's 2 weeks or 2.5 months, to enter the market at an oversold condition. All right. Now, another way to help you control that is you should always have. Now, I have 2 different accounts. I got a long-term investing account, which are stocks, ETFs, mutual funds I believe in for the next 10 years. And I buy and hold them, and I add to them every pullback. Okay. Say I put 10% of my income in there every month, even 5%, and I put your other 5% or 10%, depending on how much of your income you're putting up. Hopefully it's at least 20. If it's a bare minimum of a 10, if you read Richest Man in Babylon, then separate it 5 and 5. But if your trading account's losing money, don't keep funding it. Anyway, so what you want to do is have your one long-term investment account where you're constantly adding to your long-term positions that are bullish positions that follow the criteria in our books and on the channel. And you're adding every pullback. Okay, it's like BWXT, one of our long-term positions we've been saying since January, and we've added every oversold position, even positions where it's got close to oversold. Honestly, we've been adding, especially if the entire market was oversold, like right here. We added multiple times right here. Started when it hit the bottom Bollinger Band. Actually started when it hit the trend. And I mean, adding like crazy right there. Anyway, that's how you keep your average down. And if you truly believe in why you're holding the company, and the company's got a decent PE, and the chart's still bullish, keep adding that thing, holding out until something changes. Whether you don't like the sector anymore, you don't like the chart, PE's too high, whatever it is, and that will help you from FOMO. When you have a long-term investment account, it could be an income account where you hold something just like VIV. No matter what, it's trending down under the 200-day, but every oversold position you're adding just for the income. All right. I don't mind buying assets just for income. Actually, this is an ETF that I own. My kids own, and really, I'd let my kids decide to own it by telling them I will match the money they made doing something around the house, picking weeds, basically. They pick weeds. I told them I'd match it if they wanted to invest their money instead of spending it. They made the smart decision to invest it. They got the match, and they wanted to put it in something that'll pay them every month. So, besides the other long-term stocks in their accounts, this is one they hold. Right when it's just for income, you just want to load that up and let that compound. But I buy on the oversold. And I think this really has a little bit of everything in it, a little bit of banks, a little bit of oil companies, real estate. You have to check it out on your brokerage. Anyway, that will help you back to where I started off with that. That's going to help you defeat FOMO by having a long-term investment account. That way, when you lock your profits in right here on your trading account, so you went from there to there, 11%. So you would have locked in 30% in 13 days on your trading account. And then, oh man, it opens up and then gaps up. You're not really sweating it. You know, you're going to wait a month and a half, maybe even 20 days for a pullback, re-enter, get you another swing on. Your long-term account's still going to benefit from a long-term move if it keeps going up. Let's jump to Triple View where we're looking at the same thing. Daily charts overbought, weekly chart entered overbought, and a pretty good resistance here. It will tap out another, 5%. So another resistance level, 406, 400. Usually even numbers are pretty solid resistance as well. So if that weekly chart continues to climb, I'd definitely watch out there. But because of the daily chart and the weekly chart, we're expecting it to pull back. And once again, along with SMH, we feel like a real healthy pullback on the monthly chart would be that 20 bar moving average, the 20-month moving average. So take a look at that. I would like to see a healthy pullback there, which wouldn't even put it in oversold on the monthly, put it about 50 probably, if not higher, and see some consolidation there. Jump into SPY, ladies and gentlemen. Look at the weekly chart once again. We saw the entire market to bounce on the weekly chart a couple weeks back. It still has an inner overbought territory, but it may run a percent or two for another week. Did 2.3% last week into the overbought territory before it pulls back. Daily chart once again looks the same. Monthly chart, I mean, it's right around that 20 bar moving average. It actually touched it last month. It'd be healthy to consolidate, go a little lower, and before it moves up anymore. Now Dow Jones, same thing. This is the monthly chart. The daily chart overbought. Which, ladies and gentlemen, they were overbought over here. We would have been locking in profit on our trading account. Whoop-de-doo. I'm not worried about this gap up. Because I still got a long-term investment account that's making money on whatever, and I'm going to patiently wait for the next pullback. What we do here. So right now we are really waiting for the market to pull back, ladies and gentlemen. Long story short, monthly needs to pull back a little bit. B and oil has already pulled back some on their weekly charts and daily charts, so be looking for a swing up there. Now let's look at our bullish sectors real quick. We got people bullish on the consumer. Don't know why, but hey, consumers love spending money, even if it means going in debt, which is probably why the financial service sector is also pumping. Which, ladies and gentlemen, I don't like banks because they make money by you being broke. Really the only sector here I would trade because I'm not bullish on the consumer. Something's going to break down. There's a ton of, I'm not going to get into the fundamentals of it, but whatever. Anyway, financial sector right now, consumer sector, and tech sector are coming up bullish. Entire market might next week. Who knows? Continues running. This is all based on my bullish scans and how the charts look, which not really bullish on that at all. Definitely for some sideways swings as long as it stays above the 200. So let's look at what is oversold, which this is all going to be oil and gas, ladies and gentlemen. Those are the sectors that's oversold. Once again, I don't have a good 10-year outlook on them. I'm not really jumping in them. These are all oil and gas companies, as you would expect, being the only sector that's oversold. This is a oil and gas technologies company. I don't know what FNC technology actually does. Dig into it if you like the company to trade, but looking at the PE, I'd definitely be cautious on their earnings. Take a look at it. Always, once you find the bullish company, ladies and gentlemen, you want to do the basics and check your PE, your fundamentals out. This is a consumer company, which this has been freaking ripping for a while since this came out. Really, must have really good management. Yeah, not big swings there, ladies and gentlemen. Everything that's oversold and bullish right now are nothing I'm looking at. Real quick, if you haven't seen the previous video I did on some of TC 2000 scans, we did add a monthly and a weekly bullish oversold instead of just a daily. Let's look at these real quick. This is a food and packaging company. We are on the monthly, so we're going to go to the monthly charts. And man, it is definitely oversold. I don't know about bullish. I mean, let's see why I came up on my scan. We're only talking, that's 38 bars ago. I got basically criteria on my scan to pull something up like that. But hey, it's definitely pulled back quite a bit. I mean, there could be some value there. See, as far as PE, move this over real quick. On price to book, look at that. Price to book is 1, PE's 11. Might be a buying opportunity there if you're willing to hold for that long run. All right, I mean, if that bottoms out in the oversold territory, I mean, you do got to, if it rallies back up to its highs, I mean, you got a possible 100% gain over. I mean, it might take a year or so, but just keep in mind, a lot of people are looking for only 10% a year average. If you get 100% in a year or even 2 years, good. Definitely a good move. You're doubling your money. Ladies and gentlemen, money is a doubling game. All right, if you haven't heard it before, money is a doubling game. The quicker you can double your money, the quicker you're going to be wealthy. And the stock market gives you a lot of opportunity to do that. Pick a good strategy and stick with it. So this is oversold on the monthly. Keep in mind, it was oversold right here too. And if you would have bought there, been a few months, you've been up 2 months, you've been up 30%. Didn't really rally much to the overbought on the monthly. But, you know, let's say you've seen a red month there and decided to lock in 13% in 2 months. Still not bad. Right now it's at 5 on the stochastics, pretty oversold. That's kind of a turnaround candle. Let's say the sucker turns around and rallies up to the 20 bar moving average. Now, keep in mind, all of the daily charts on these are going to look like crap. They all break our daily chart rules, right? They're under the 200-day. Daily chart looks bearish. But these may be some of the ones where the daily chart starts turning around under the 200, which is probably what you're seeing here. All right, that's probably the month where you would have made about 20% or so. We can go back and look. That's May. But if you're trading them on the monthly chart. All right, back to wait. Yeah, that was May. We've seen that on the daily chart. All right, we got Croc. That monthly chart looks like a swinger, ladies and gentlemen. And geez, if you would have bought when it was oversold there, 126% in 10 months. Heck of a 10 months, believe it or not. I mean, and you may rally. People may be wearing Crocs a lot more because they ain't got the money. All right, they're taking on that debt and spending that money on Crocs just to have shoes. I mean, that's a possible. If it only goes up to this previous little monthly rally, 65 to 90% gain over. And even if it's a year, might not be a bad trade. All right, so these are just some of the top ones oversold on the monthly chart. Let's take a look. And ladies and gentlemen, I'm not going to go through all these, but I just did a video on how to build this on TC 2000, all my bullish scans. So if it's something you want to do, feel free to do it. And you can spend all weekend just going through them, studying them, weekly oversold, monthly oversold, daily oversold, digging into the companies, finding out the PEs. This is the weekly. Let's move the PE over. Price to book. A lot of PE stuff on top of the change. All right, let's look at the weekly charts real quick. We'll look at the top few as far as movements. And we got oil and gas. Once again, we went over that sector. That sector is getting oversold on the weekly. So those weekly stock charts might rally. You might get 20% in a month. All right, now keep in mind we're trading this based on the weekly, not the monthly, not the daily. All right. So those are probably going to be some of your top ones, going to be in the oil and gas industry. Once at that point, you got to make the decision: would you rather have a company? Does the chart on the company look better than the overall ETF? And keep in mind, only go about 20% in, 30% max on the ETF, and scale in to lower your average if needed. Those are some of the interactive brokers. I tried them. Don't like them at all. They actually link to TC2000. You can make trades based on the price chart, and I don't. I tried it. I'm not a fan of it at all. Anyway, that is it, ladies and gentlemen. If you have any questions or comments, let me know. Give me some feedback. Let me know what you want to see. Otherwise, enjoy the week, and I hope you make a ton of money.